So you want to be a real estate investor, or maybe you already are and you want to cash out of those properties and buy another one. That's what a DSCR ratio is all about. My name is Frank Vaccaro here with Loan Lab, where we formulate creative mortgages for real estate investors, business owners, cash earners, basically people that the normal banks don't want to talk to. Let's get into what a DSCR ratio is. A loan that is made for people that don't have the best DTI, debt to income ratio, and it allows you to qualify for a home or qualify for a cash out refinance just using the money earned from the property, not so much you as a person or you as an entity, but from the property. The way it works is you have money that comes in for your property, you have money that goes out, and then we divide those into the DSCR ratio. So let's say coming in, you're charging $2,000 a month for rent, okay? Then let's say going out, total, you're spending $1,500 a month on that property. So let's say that looks like $1,200 a month on your mortgage, $200 a month on taxes, $100 a month on insurance, right? So we'll keep very easy numbers. So this gives us $1,500 in expenses, okay? So right now you're profiting $500 a month from that property, okay? This, if we divide the two, that gives us a 1.33 DSCR ratio, okay? Anything 1 or above gets you the best terms on a DSCR loan, okay? So if we're 1 or above, so even if this was up to 2,000, right, you're still going to get positive loan terms. Now, if we change these numbers and we come in at 2,000 a month, okay, so let's say this is a bit higher. Okay, so we're at 2,000 a month, so we're equal here. That still gives us a 1 DSCR ratio, and we'll still get you some pretty positive loan terms. Obviously not as good as 1.33. Now, if we flip this and this is higher, let's say this is now 2,100. Okay, so now we're under a 1. So we're under a 1. We can still get you a loan that you need to buy that property or cash out. The terms may just not be as favorable as we're all hoping for, but you can still get that loan too. Okay, so really the positives of this loan and what makes it so attractive for so many people is that it does not look at your personal income. We just look at what is the property producing. Now, let's say you don't own the property yet, right? You're buying an income producing property. How do we figure out what that looks like? Well, what we do is during the appraisal process, they don't just appraise how much the house is worth. They also appraise how much will it rent for. Okay, and they use that based on the market, not so much that specific house. Our phone number, 484-574-3757. We can do DSCRs in, I think, 47 of the 50 states. So if you're looking for a DSCR loan, we would love to help you out. If you're looking for any other kind of loan, if you're a small business owner, right? Really, if you're anyone looking for a home loan, we would love to help you out. Give us a call, send us a message. We'll talk to you soon.